Welcome to Missoula Real Estate Today. This is Denny Bedard. Missoula Real Estate Today is presented by Diane Beck of Windermere Real Estate. Along with her trusted partners, Diane provides complete service for your real estate transaction. And now, Missoula Real Estate Today on News Talk, KGVO. Well, hello. Good of you to be with us on Missoula Real Estate Today. We've got to talk mortgage things with a new guest on the program, Matt Gehr. Matt is a mortgage loan officer with Mann Mortgage here in Missoula. Welcome to the show, man.
Yeah, thanks for having me. I'm really excited to be here.
It is a pleasure. Normally, Rob Fleming will cover this when we are able to get him in, but you are the guy today. Rob couldn't make it, so it was nice of you to step in for him.
Yeah, he twisted my arm, and it'll be a fun chance to chat.
Our goal is to make people forget about Rob Fleming with Matt Gehr. That's well, let's get a little bit acquainted with you there, Matt. Your duties at Mann Mortgage as a mortgage loan officer and how you found your way there.
Yeah, absolutely. So if I were to give you the one sentence answer, my job is to do mortgage loans and to help people buy homes. It's really a lot more complicated than that. Sure. At the end of the day, our job is to get to know our clients, understand their priorities and concerns so that we can really tailor our products to fit their specific needs. Not everyone's looking for quite the same thing out of the process. So we've got to spend time getting to know them. And then after they're pre-approved and they've got a house identified, they're in the process of truly buying, we get to be the shepherd throughout that process. And I like to joke that I'm a part-time unlicensed therapist because we're hand-holding a little bit and making sure that they feel okay with the decisions they're making and understanding what's going on.
Therapists and shepherds, good words there.
I practiced with my thesaurus yesterday. So yeah, how did I arrive at Mann Mortgage though? My background came from regional banking, so I was in a more traditional bank environment for quite a while. I was a mortgage loan officer in that setting, and I'd been originating for several years, and I was looking for just a slightly different environment. And really two things drew me to Mann Mortgage, one of which was the expertise of the organization itself. Look, Mann Mortgage does residential mortgage lending. It's the only thing we do. We're specialized and we're very good at that one thing. And that means that my assistant, my processor, my underwriter, and my back-end staff all really, really know what they're doing. And that creates a lot of ease of business for me personally. I don't have to handhold things quite as much. I can really get things structured, packaged, and sent off to my team, and they can handle it really, really well. That frees up a lot of my time to be more available to my clients, more available to the other industry partners that I work with, and just give a little bit higher level of service. So that was the first thing that kind of drew me in. And then second was the team locally. There are a handful of talented people. I mean, you mentioned Rob Fleming. We've got Julie Lapham and a handful of other really talented originators. And I wanted to work with the people that are the absolute best at this because that's who I wanted to learn from. They've been doing this longer than I have, and it was a great opportunity for me to be surrounded by that expertise, and I think that's a wonderful way to grow.
That does that increases your confidence and your motivation, doesn't it? When you're working around surrounded by people like that, a lot of experience, a lot of options that they can help people with, and you just feel pretty good about the direction you're taking a client when you're with a company like Mann Mortgage.
Absolutely. And we get to have those conversations across the hall of interesting new things we've discovered or exceptions that we can make and new tools that we can put out there to help people. And it's a great way to just be exposed to that frequently.
Right. Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate, and my guest, Matt Gehr, mortgage loan officer with Mann Mortgage here in Missoula. How does the process begin, Matt, of getting a mortgage, and have there been any noteworthy changes to that process recently?
Yeah, the process for getting a mortgage or a pre-approval, it really starts with just filling out an application. That's when you're really formally looking to get pre-qualified or pre-approved. We can certainly do consultations with people and advise on their general options and maybe come up with a rough estimate of where they stand without an application. But there's just missing information that without that, I can't be as thorough. I can't be as precise. So we need to have you fill that out. We need to look at some of your documents, think pay stubs, W-2s, bank statements. We need to pull a credit report. And those things are going to tell us what we can truly do for you. So if you're looking to get out and actually shop for homes, that's where you start. You fill out a mortgage application so we can tell you, yeah, the money is actually going to be there for you to buy the house. But not only that, this is what you're going to look at in terms of a monthly payment. This is how much cash you're going to part ways with as far as down payment and closing costs. We can start to give you really precise estimates there. That process I think the big change that we've seen over the last handful of years is a move to more digital. More and more people are looking to do this online or remotely. And so we certainly have the tools to accommodate that. I find that it's really nice to be able to meet with my clients in person if I can, but the pandemic saw a pretty dramatic shift away from that. So more and more people are filling out their applications online, dealing with me via email, Dropbox, or other digital tools.
Right.
So that's the shift there.
Is there a most difficult part to the mortgage process?
At the end of the day, that's always going to be situational. What's difficult for one person might not be for another. It depends both on the complexity of the individual and the transaction itself. So someone with more complex finances, they're going to have to provide a lot of documentation early in the process. If you're self-employed and you own 5 businesses, you've got your assets put into a trust, there's a lot of paperwork that goes behind reviewing that. So for that individual, the most difficult part is in the beginning, just the large amount of documentation they're going to be asked for. For other people, maybe it's credit. If you have damaged credit and you need to do some work there, we might have to give some advice and take some time to do that. So it depends enormously on the person. And that's why getting in front of someone early in the process is meaningful, because we want to identify what's going to be difficult for you as soon as we can and give you time to address that.
There has been a fair amount of flux, shall we say, in your industry recently. Interest rates still a very hot topic, I guess for a different reason than they have been the last few years, or at least a couple of years ago. Do you have any sense, I guess I'm just asking for your personal opinion, for which direction they might go in the near future, if there is any movement at all?
Yeah, if we're looking at where rates are headed, again, the short version answer of that is going to be they're getting better. Rates are improving, and we expect that trend to continue over the course of this next year. I can't give you a number. I can't say, hey, at the end of 2023, rates are going to be 4.5% or something like that. We just don't know. And those types of predictions tend to end up being really, really inaccurate. But there's a lot of data that says rates are getting better. Now, if we look in the very short term, what's going to happen in the next 2 weeks or the next 30 days? Nobody actually knows. And that can be influenced by so many things that we never would have thought to have taken into consideration previously. We saw a few months ago in the UK, they had their crisis with their pension system, and that tinkered around with UK bonds, which then impacted the US bond market, which impacted US mortgage rates. I can tell you pretty credibly that none of the loan officers I know, myself included, were paying close attention to the UK bond system because it might affect your mortgage rates. So short term, they're all over the place. Long term, they're trending towards the better.
Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. And my guest is Matt Gehr. Matt is a mortgage loan officer with Mann Mortgage here in Missoula. And you can come back another time later, Matt, once you understand the whole UK pension and when you're
I'll get my head wrapped around that one, and then it'll be an earthquake in China affecting mortgage rates. And
we would like you to be better prepared next time you come in. Well, because of those of the current interest rate numbers, I guess that's how I put that. Do you see borrowers feeling any less confidence in the amount of money they're able to budget for a mortgage?
In some cases, yes, sadly. Interest rates aren't the only thing that impact the affordability of housing. And I always encourage people to look at the bottom line, and that's your monthly payment, which is a combination of both the price and the rate. But I can't sit here and tell you that interest rates don't matter. You can look at that, and they really do. And they are much higher than they were 2 years ago.
And it can be a small number. It can be 0.25%. It can be 0.5%. But to your point, whatever change there is there, it does indeed matter. Yeah,
and you have to look at it. We went from 3 to 3.5%.
Right.
We peaked out in the mid 7s on average. We hit 7.5% on average at one point last year, and that change is enormous and meaningful. Unfortunately, that has hit the bottom line for some people. I see that situation improving a little bit. Anecdotally, I see some wage growth in Missoula. I also see people kind of coming to terms with interest rates just aren't 3% on a 30-year loan.
Yeah.
And it's incredibly unlikely that we're going to see that again in the near future. So this is kind of where we are. And people understand that interest rates are a little higher. Those monthly payments are a little bit higher. But for some people, that has made it difficult. There are some good tools out there. So, if you're in that demographic that maybe is struggling to find a place that fits your budget, you should reach out to Homeward. They're a wonderful local nonprofit that can help with housing counseling. And the other thing I'd advocate for is more community land trust properties. We've seen that as a really wonderful tool for both current and perpetual affordability. And that's something that people can look into. North Missoula CDC manages those locally.
Can you explain a little bit of what those are?
Yeah, so a community land trust, what they do is they own the land under the house. You buy the house and they lease the land back to you long term. In Missoula, it's going to be a 70-year lease. And so that conveys the vast majority of the land to you. And the reason they put that restriction on the land is that they can then restrict the deed. So in order to buy the property, your income must be under a certain amount.
Got it.
And the price of the property can only go up a fixed amount each year. So when we see 25% increases in home values in 1 year, that doesn't apply to these community land trust homes. So they're affordable today, but they stay affordable long term because the cost only goes up about 1 to 1.5% each year.
All right.
And that's been a wonderful tool for people. If someone's coming to me, say, maybe on a fixed income with no prospect for increasing their income, get on the wait list with NMCDC. Those properties can be really affordable. And in some situations, there's really cool loan tools. You can do conventional loans, oftentimes with 0% down, no mortgage insurance. You can often sell the loans to the Montana Board of Housing with a subsidized interest rate. And it's, again, situational, but this might be the difference between a $1,500 a month payment and a $2,500 a month payment on the same house.
So if you qualify that land lease, it starts, it sounds like to me, it starts as a fairly reasonable figure and does not increase much incrementally.
The land lease is just a small fixed amount annually that you pay as the owner, but really that lease is there to be able to restrict the property with those income limits and those sales price limits. That's its true function.
Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. My guest, Matt Gehr, mortgage loan officer with Mann Mortgage. Also want to say thank you to Diane's marketing partners that help bring you this program every weekend on News Talk KGVO. One of them is Matt's buddy, Rob Fleming with Mann Mortgage, along with Miles Link at Opportunity Bank of Montana. And back to Matt Gehr with Mann Mortgage. We had Brent Wahlberg from Windermere Real Estate on last week's show, Matt. I don't know if you ever met Brent or not, but he's considered kind of the numbers guy at Windermere. And he did gave the number definition of affordable housing. Is that something that enters into your consultation with prospective home buyers?
Absolutely. And yes, I'm very familiar with Brent. He's a really wonderful guy.
Dude,
I've had the chance to work with him. Brent's fantastic source of information.
Yeah.
Yes, there are certain definitions of affordable housing. There are some set by the federal government or nonprofits, and that can move a little bit. But typically the number that I see thrown around is that 1/3 of your gross income, or about 30% of your gross income, is going towards housing. That amount or less is considered affordable by most definitions. I have found that, again, it's situational. I keep coming back to that. It's different for everybody. And so when people walk into my office, I'm not going to apply a one-size-fits-all definition of affordable. I'm going to ask questions. And it typically goes something like this. People will fill out an application and they'll say, Matt, okay, cool. What do I qualify for? What's my max? And before I answer that question, I'm going to say, okay, well, before we tell you that, I need you to tell me, what's the most you are comfortable paying per month? What's your maximum monthly payment that you're okay taking on? Because that number might not align with what I can approve, and it might not align with that 30%. Some people are comfortable taking on a higher housing payment, and they make that work just fine. And some people are not. So you need to find where that spot lies for each individual.
I think that's when Brent was trying to explain that to me. I think that's where it can become kind of a dizzying term, just because, okay, to your point, there could be a different answer with every client, every customer, as far as what a good debt to income ratio formula is, and what you were trying to do, and in your position at Mann Mortgage, is just let's make absolutely sure that you can afford it. We can't, there's a textbook definition, but let's make sure that your personal definition lines up with that, right?
Exactly. Just because I can approve a loan doesn't mean that it's a comfortable monthly payment for you.
Yeah.
If you have exceptional credit, we can really kind of stretch things out for you on the debt front to a place that I personally would be extremely uncomfortable. And for some people that works, and for some people that doesn't. So I really just don't think there's a one-size-fits-all answer there.
Right.
We also don't, that debt-to-income ratio doesn't take into account all of your expenses. We're looking at credit debt. So you might have other large fixed expenses that we're not looking at. Say, for example, you have like a lot of medical expense. That doesn't show up on a credit report. That's not something we're looking at, but it's absolutely a part of your budget, and it absolutely impacts what you can afford. So we need to talk about that.
What is an average or practical amount of time you should expect to wait before being approved? And I know for the most part that has stayed consistently brief. I've always been really impressed with that time frame. Has anything affected that waiting period recently?
There's certainly an expectation that it happens pretty quickly, and I frankly think that's fair.
Yeah.
For your average individual, someone that gets a W-2 and they just collect a paycheck from an employer, they've got a decent credit score, and they've got a down payment for that person. I always ask for 24 hours, but in a pinch, we can get that done in a couple hours. You get me an application and some pay stubs, we'll look over that, and if it all looks fine and pretty straightforward, hour and a half, 2 hours is really the amount of time that I need physically in a loan file to get it done. There are, of course, exceptions. We'll go back to that complicated individual that maybe owns 5 businesses and has assets all over the place. If your tax return is 200 pages long, I'm not going through that in detail in an hour and a half. It might take a day or two.
Yeah.
Or if you're getting a jumbo loan, that's any loan over $726,000 approximately. You're entering into a whole new world with all kinds of extra requirements and guidelines. And so we need to spend a little more time doing due diligence on that. Maybe that takes 2 days. If you aren't getting a response from a loan officer within 24 hours of having submitted an application, that is a red flag. And if they are taking more than that 1 or 2 days, there should be a reasonable explanation provided to you, along with a timeline of this is when I will have it ready.
Yeah.
If it's taking me longer than that, it probably means I have asked you for something and you haven't sent it to me yet.
Okay. All right. Two-way street. Two-way street.
Oh, absolutely.
Are you seeing, Matt, any trends in the way potential home buyers are approaching trying to get a mortgage loan at Mann Mortgage?
Oh, gosh. I do see people coming in a little bit more educated. My first-time home buyers are taking the first-time buyer class a lot more frequently. Oh. So the level of literacy that people are coming to me with is quite a bit higher than what I was seeing 2 or 3 years ago even. So I think education is a big component of how they are trying to prepare. We have the repeat buyers and the first-time buyers, and these are very different categories. First-time buyers are getting more assistance, more help from family. That's happening with a greater degree of frequency. They're coming to me earlier in the process, and that's really helpful. The repeat buyers are taking their time. They're saying, this is the house. This is what I think I can sell it for. They're getting with their realtor in advance and really being very strategic and planning things out. As far as unique strategies, again, it's going to be person by person and house by house. Sometimes you can haggle and have the seller pay a big chunk of your closing costs. Maybe you can have them buy down your interest rate, something like that. There are tools, but what works for you might not work for somebody else. You've just got to get in touch with professionals early in the process and get advice that is specific to your situation.
Yeah. Well, and I think that helps you and the prospective buyer alike. The more educated applicants are these days, because there's a heck of a lot more than one program to choose from anymore.
Yes, and there are different ways to structure loans within the same program. Do you want to pay a little bit extra up front and get a better interest rate and a lower monthly payment? Great. That's something we can do. So there are ways to tailor that to fit your assets and your monthly payment needs. Yeah.
Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate on News Talk KGVO. my guest, Matt Gehr. Matt's a mortgage loan officer with Mann Mortgage here in Missoula. Okay, let's get to this one, Matt. What are common mistakes that borrowers make in the application process that you can help correct?
Oh gosh, one that I see a lot is the assumption that if you're a first-time home buyer, you need to get an FHA loan, or that it is hands down the best option. The answer to that is maybe not.
Sure.
Those can be a cool lending product. I find that it's geared more towards people with either damaged credit or limited credit history, resulting in a lower score. FHA doesn't, the interest rates and monthly mortgage insurance don't move up and down based on your credit score nearly as much as they would with a conventional loan. So that's a really common misconception. I see a ton of people saying, oh, I'm a first-time home buyer, I need an FHA loan.
Yeah.
Down payment assistance is one we get a ton of questions about. No, it's there. It exists as a resource. There are tools to help you with down payment, but there's often a lot of strings attached to that. So I'll have people asking to get down payment assistance that perhaps don't need it. And you have to counsel them that, hey, for you, the trade-off isn't worth it. For some people, it is. Understanding credit and credit scores is always a journey, and I see a ton of misconceptions there. I see a ton of bad advice in that space. Just be really careful there with who is helping you and assisting you with credit-related advice. Closing costs, that gets missed all the time. A lot of people say, oh, I need 5% for a down payment or 3% for a down payment. And that's how much they have saved. And they come to me and they say, cool, I have my down payment. And you have to explain there are other costs and fees when you get a mortgage, and they're not insubstantial. For most people, it's an extra $5,000 to $10,000 in addition to your down payment. So you should account for that. There's tools. Maybe you can get the seller to pay those closing costs on your behalf, some or all of it, but it's not just the down payment. There's other costs and fees.
A little while ago, you brought up a home buyers class. I don't know much about that, how it's offered, if that's in a meeting room or it's an online thing, but I would assume those are some of the kinds of things that you would get familiar with, better acquainted with, if you were to take, say, this home buyers class. Yeah,
absolutely. And so again, the organization in Missoula that you would reach out to if that's something you're interested in, it's Homeward, HOMEWORD.
Yeah.
.org.
They've been on the show before.
They're fantastic. And yeah, they are going to walk you through all of this stuff. They're going to walk you through the mortgage side of it, the home buying side of it, the inspection, getting insurance, all of that. And so they're really very detailed in their education. That is a requirement. That class is a requirement if you want to get down payment assistance of any kind. So if you're looking for down payment assistance, you need to get yourself into that class. If you're not needing down payment assistance, I want to say the class costs $35. It's worth every penny. The home buyers that come to me out of that are universally more prepared and less stressed out during the process.
That's a heck. I think you're right on that price. I think the last time that did come up, and it was probably when Homeward was on the show, which has been a while now, but I believe the figure they gave was 35. So if it's not still 35, probably pretty close to that. Kind of leads me to this one here. We're still a high demand housing market. Is it more important than ever to be pre-qualified?
Absolutely. I know some real estate agents will require that before they take you out to look at properties. Yeah. Some sellers will not even consider an offer without a pre-approval letter attached to it. And rightfully so. If you're looking to sell a house, or if you're going to be driving all over Western Montana to show people houses, you probably want to know that the money is there for that individual to buy the house. So getting pre-approved allows us as the lender to give you a letter to that effect saying, hey, I've reviewed this person's financials. I've looked at their credit. If they need to get a loan, they're going to get a loan. The money's there.
Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate, and my guest, Matt Gehr, mortgage loan officer with Mann Mortgage. What are some of the questions you like to ask, Matt, at the start to help you recognize whether or not you'll be able to help those applicants?
Yeah, we start with pretty open-ended questions. Tell me what your priorities are. What are you looking to get out of this process? But really, there are a couple of essential questions that I like to ask. One of them we already touched on. What's the maximum monthly payment that you are comfortable with? I'm going to ask that to every single person I talk to. I'm typically also going to ask some form of the question, How much cash do you have on hand for down payment, closing costs? What do you have available? Those two things are going to tell me so much about what the transaction is going to look like. And there's a lot of follow-up questions, but that really points me in a couple of directions of, okay, do we need down payment assistance? What kind of loans are we looking at? If you're looking at a $500,000 house and your expectation is a $1,200 a month payment, I know that I have some work to do as far as realigning expectations, unfortunately. $1,200 a month just isn't going to happen right now, not with the combination of rates and prices. So it tells me a lot about where people are at and then helps me to tailor my next set of questions and get a little more specific.
Are you continuing to see growth in the online application process? I would believe that potential home buyers are getting more savvy and accepting and comfortable with that.
Yes. I haven't pulled actual statistics on that, but I would guess that 90 to 95% of my applicants are filling out the application online. It's relatively fast and easy. You can do it from the comfort of your home. And then we typically follow up with an in-person meeting or a video call, something like that. If I have an application before I sit down to meet with you, I can actually make much, much better use of your time. I've already looked at all of the financials. I have a good rough idea of where you stand. And so our sit down for half an hour or an hour isn't me asking a bunch of general questions. It's asking more fine-tuned questions and giving much more specific advice.
Are borrowers getting pretty good at it? Do you still have to scrutinize the online app a lot, or are they pretty good?
They're pretty good. Most
you don't have
of
to
it,
name names or anything.
most of the information's coming through pretty well. We have the same handful of areas that aren't particularly intuitive, and people will often leave that blank. And then I just follow up and say, hey, help me fill in these gaps here. But for the most part, the information comes through really good and really accurate.
Yeah. Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. My guest, Matt Gehr, mortgage loan officer with Mann Mortgage here in Missoula. Gosh, I'm down to the final couple minutes here, Matt. I want to make sure that you get your free commercial time, and then I may go back and have you talk a little more about the Mann Mortgage team. But before we wrap it up, why is Mann Mortgage a great place to do business?
To put it really simply, it's a combination of both expertise and compassion. We're all about doing residential mortgages. It's our only function, and we're very good at it. We also are deeply invested in the success of our clients. And I think that's reflected in the wide variety of loans we do. I think that's reflected in the very high numbers of down payment assistance and affordable lending products that we do. It's not our first time with any kind of loan product. So we have the experience, and we want to see you land in a good place when you come to us for a mortgage. I mean, we're not helping people buy a pair of shoes. These are huge, huge transactions, and our ethical responsibility to our clients is enormous. Like we have a huge responsibility to both counsel, educate, and guide them throughout this process. And that's something that I believe in deeply personally, and that our team is really invested in it. I
imagine that you are continually learning as well, right? A lot of training and updating and things like that.
Every day. Every day we learn something new.
Matt Gehr with Mann Mortgage, a mortgage loan officer at Mann, has been my guest this week on Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. And final thoughts, Matt, contact info if folks would like to get acquainted with you and all of those kinds of things.
Yeah, what I can say is, first of all, I'm very easy to find on Google. MattGehr, that's my name. You can type it in. All my information's out there. Matt.Gehr at mannmortgage.com. That's my email address. Feel free to reach out. We're not hard to get a hold of. We're happy to chat, whether you're looking to buy a house now, if you're a year or two out on the process and you just kind of want to start to get your ducks in a row, reach out. Seriously, We're happy to help. It's not always a transactional thing. We're a resource that's here to help you, to educate you, whatever that is that you need.
Matt Gehr with Mann Mortgage. Fantastic job. Thank you so much for coming in.
Yeah, thank you so much for having me. It was a real pleasure.
Thank you for listening to Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. For a complete directory of Diane's listings, visit move2missoula.com. That's move, the number 2, Missoula.com. We'll see you next time on Missoula Real Estate Today.